Of all of the reasons to tap the equity in your home, this one's my favorite, and it's a good one to end the series on. Most borrowing takes money out of your house and spends it on something that disappears. This one takes money out of your house and puts it right back in. Today I'm going to show you how to use a refinance to pay for home renovations, the 2 different tools you can use, and the honest catch you need to hear before you knock down a wall. This is another episode in our refinance breakdown. Let's make it count. First, how it works. The most common path is a cash-out refinance. You replace your current mortgage with a larger one, and the difference comes back to you as cash. That cash funds your renovations. When it's done, you have one mortgage payment and a finished project instead of a credit card bill or a contractor payment plan. To do this, you need equity, meaning your home has to be worth more than you owe. The equity you have today sets the budget in the amount that you can pull today. Now, here's why I love this one. When you borrow to consolidate debt or pay a bill, the money leaves and doesn't come back. When you borrow to renovate, you're putting the money back into the very thing it came from. A smart renovation can raise the value of your home, so you're not just spending equity, you're working to rebuild it. And you get to live in the result every single day. That's a return you feel long before you ever sell. Here's where a good loan officer earns their keep, because there are 2 different tools and they are not the same thing. A cash-out refinance is based on the equity you have right now. Simple and flexible if you have plenty of it. But a renovation loan like a 203K or a Fannie Mae HomeStyle works very differently. It lets you borrow based on what your home will be worth after the renovation is finished, not just what it's worth today. That matters a lot if you don't have much equity or if the project is large. The trade-offs are that there are more rules, more paperwork, and require licensed contractor requirements before the lender is going to fund the project. They're not just handing you the cash. Which one fits depends on your equity and your project, and that is a conversation, not a one-size answer. Now, the honest part, because I'm not going to skip it. Not every renovation adds value, and some add far less than they cost. A kitchen or bathroom update tends to return a healthy share of what you put into it. A pool is a luxury addition, and anything fancier than what else is on your street often returns much less because you can over-improve for your neighborhood. The market will only pay you so much for a home on your block, no matter how beautiful you make it. There's a timeline catch too. A renovation is a one-time project, but a mortgage is spread over decades. Fund a project with a 30-year loan and only make the normal payment, and you can pay interest on that kitchen for 30 years. The fix is the same one from the whole series. Be a good banker, pay it down faster so a short project doesn't become a long bill, and budget honestly with a cushion because renovations run over, and the worst outcome is running out of money halfway and reaching for a high interest rate credit card to finish. So how do you do it right? Start with value. Favor the improvements buyers in your area actually pay for. Get a real scope and a budget from a licensed contractor before you size the loan. And once the project is done, put any breathing room back towards principal. You renovated the house. Don't let the loan outlive the project. Now, who's this for? A homeowner staying put who wants to improve their space, their value, or both? Equity and flexibility lean cash out. Bigger projects or less equity lean renovation loan. Either way, for a real project, this almost always beats high interest credit cards or a contractor payment plan. That closes out our refinance breakdown. 4 episodes, 4 scenarios, real numbers, and straight talk every time. If you want us to run your options for your home, the calendar link is in the description. You bring the project, we'll bring the math. I'm Toni Taylor with Interconnect Mortgage, and if you found this information helpful, please hit the subscribe button so we can continue to bring more information to you.